the way I intend to look at this and is to first just place where India was and is in terms of certain statistics to show you that a number of BEPS concerns were actually being tackled and addressed in India, and that therefore for the Indian tax administration and for the Indian tax practitioners, a number of these concerns or a number of the issues which were being addressed have got crystallized in these in this significant documentation which has happened. And then how do we need to do some crystal ball gazing and see how we should be responding to it in the future. So, you know, there's a statistics for the degree of openness in an economy. What you do is, that is your openness to trade. So you have exports and imports of goods and services as a proportion of GDP. And India consistently over the last, across the last decade, has been around 50%. And that shows how open and globalized the economy has now become. As a comparison, China is 42, Brazil is 26, India, I said, is 50, Indonesia, I'm talking about the members of the G20, Indonesia is 48, South Africa is 64. So the point is that we therefore, even while addressing these issues as tax practitioners, have in fact been tackling the three major tax issues with regard to international taxation, which is in a way the withholding, the source rule about whether a PE gets formed or not, and then the one which has been less talked about, the attribution of profits to that PE. And the third is that the investments which are coming into India as foreign investments, the relationship of that transaction between associated entities, so the transfer pricing. And in relation to that, our FDI inflows, India, as was perhaps mentioned yesterday also, was the 9th largest recipient of foreign direct investment. So therefore, the fact that we were taxing international transactions and that we had a number of concerns regarding the taxation of these international transactions, and practitioners were facing a number of these issues even prior to the concerns being raised at the level of BEPS, which actually came from the fact of the financial meltdown of 2008-9 and the concerns of the G20, of the OECD countries regarding their tax base with regard to corporation tax. But actually, India's corporate tax to GDP ratio has been close to 3.5%, and the OECD average is close to 3%. So the challenge which India faces in terms of our tax to GDP ratio is actually the fact, if you look at structure of tax to GDP in other countries, it's essentially on the personal income tax and on the indirect taxes. And therefore, GST is a big factor, and that's a separate line of discussion. But 3.5% as corporate tax as a percentage of GDP shows that a number of these concerns, and you would all have seen that a number of these concerns have over the years been translated from whether you have Chapter 6 deductions or what is the litigation there, to actually international tax issues regarding PE formation, attribution, and mostly transfer pricing. That is the most litigated part of taxation now. And this is even the pre-BEPS project.